Hey, good to see you, my investor friends. This is Lucas here. Now, yesterday I was talking to you about how you can build your wealth without money at all. Because you got to see it like this. Everybody can start by itself and become that self-made millionaire. And hey, yesterday I talked about 3 things that you should pay attention to. Is that who do you listen to? Who is your example? It is very important if you want to make your own wealth. It is so important. The people who you think are your example, those are the things that you're going to do in your own future as well. The second thing that I talked about yesterday is that you need to start making money. Now, you might be thinking, didn't Lucas just say to create your wealth without money? But yes, you got to see it like this. You still got to make money to create that wealth in the future. It's not that, you buy a lottery ticket today and all of a sudden tomorrow you're super millionaire or anything. It doesn't happen to many people. Like I said, they're just a very select group that really wins the lottery. And of course, the third thing is that I talked about yesterday is about saving your money. The moment you start saving your money, what happens is that with that money that you save, of course, is that you can start investing in things that will generate money for you in the end, so that you have money working for more money. But hey, let's continue this story today, because today I'm going to share the other 3 things that I've done in my life, of course, to create my own wealth. Let's get into it. Okay, so the number one thing that I think is very important is investing in yourself. Investing in yourself. Because you got to see it like this. If you do not learn anything, if you always believe that whatever you do, what you do is already the best thing ever, then, why are you watching this video at all then, right? Because if you believe in yourself and think, I'm saying like believing in yourself is very important, but always being open to knowledge from others and thinking, what? This person has a good point. And if this person says, if you believe in this person, you might be able to learn from this person. And learning from this person, like in my case, you could be learning from me. In this case, I'm sharing my story with you. If you want to believe in my story, then what I could do for you is I could help you in your journey. And this is what I did for myself as well. When I was 17 years old, I found my own coach. And my own coach, he taught me, like, Lucas, you may be a great person of who you are right now, but you got to think of it. If you see yourself like, I can always learn from somebody else, you can always at least make the choice of thinking, this is what I like, I'll learn something from you. And if you don't like it, I'm checking if the battery's still on. Yes, the battery's still on. Okay, so if you don't like the information, then what happens? It's very simple. You don't have to take all the information in. You don't have to apply it in your own life. And this is why it's so important. You got to start investing in yourself. This is why me and my wife, we always do at least 1 course a year. We always take up 1 coaching per year. Even this year, although we're all in lockdown, I don't know about you, but still, we always try to find time to learn. We try people, we try to find coaches, mentors that we could follow and think like, we could learn from these people so that in the end, we could grow our own wealth. Now, wealth doesn't always have to be about money at all. Creating all the things that you want in your own life is already very important. And you got to see it like this. If you don't experience things good or bad, then the only thing is you have the experience that you always had. And I don't know about you if you know Tony Robbins, but Tony Robbins always says, if you do the things that you always do, then the results will always be the same. But if you do things that you normally don't do, then all of a sudden what would happen is you would get results that you normally would never get. And this is the huge difference between people who want to invest in themselves, and sometimes investing in yourself can cost a lot of money. And sometimes investing in yourself costs a lot of time. And sometimes investing in yourself costs a lot of effort. It depends on what you want to achieve and who you want to achieve it with. Okay? So the first thing that I think is very important is investing in yourself. Number 2, of course, that you should actually think about if you want to create a lot of wealth is learn taxes work. And you might be thinking, taxes? Yes. Now, you got to see it like this. Every country is set up that the taxes should be beneficial for everyone who lives in that country. Now, you might be thinking, yeah, but, I live in the Netherlands. I don't know about you. Let me know down below in the comments of what country you live in, because every country has a different government, and the government always handles different businesses, handles different employees. Now, and talking about employees and businesses, we've got, of course, Robert Kiyosaki talks about the cash flow quadrant. If you don't know it yet, go check out the book. You'll find a lot of value in that book, of course. Now, we have the cash flow quadrant. On top, on the left top, we have the employee, a person who exchanges his or her time, for money. So the only thing what you do is, of course, you exchange a lot of time for money. The moment you exchange more time, you could get more money. And sometimes you don't. Sometimes you have to work over and you don't get paid extra. Sometimes, okay? Then on the other left side, of course, on the left bottom, you have the self-employed. What you see is, for example, doctors are like this and lawyers are like this. People who have their own businesses. Those people, those are the self-employed. What happens is, of course, again, you exchange your time for money. But, you think, well, but a doctor exchanging time for money? Yes. A doctor is just making a higher hourly rate compared to the employee, of course. They charge maybe $500 per hour and therefore get more income. But in the end, it is still the same thing, because the moment they stop working, what happens is they don't get any income. The idea is very same. On the other end, we've got the top right is the business owner, so a person who owns a business. What happens is these people are not necessarily exchanging their time to get money. They exchange their time to manage others who work for them. And then, he could take a holiday, and then all of a sudden, his business is still running and he could still get money in because his employees are, taking care of everything. And then, of course, in the right bottom, we've got the investor. Now, you got to see it like this. So why do I mention this cash flow quadrant? And I'm going to use a different color in this case. What happens here is on these ends, the government charges somewhere, like 45% of taxes. So if you're on that end, what happens is that on these ends, so you're being an employee or you're being a self-employed person, what happens is the government takes a huge cut of your income, because these people just bring the least money. And you'll be thinking, least money? I don't know about you, but if you're making 3K in income, what the tax does, they may cut off like 1.5K, maybe a bit less, but get the idea. Because this is the only income you get, the government already takes like 50% or 45% of your income, saying like, hey, dude, you didn't bring anything to the table as a citizen of our country. So what I'm doing is I'm taking a huge bite out of your pocket because you didn't bring that much. Whereas a business owner, in this case, for example, they could be making 500K per year, and you might be thinking, dude, that business is they're making a lot of money, $500,000 per year. But that business owner has, of course, lots of employees to pay. He's got a lot of taxes. He's got a lot of expenses. So therefore, the government would say, you know what? Instead of that, I don't know about your country, in our country, they say, you know what? Because you're a business owner, as a government, we would tell you, you know what? I'll charge you less. I'll charge you about 20%. And all the remaining money goes to your employees and the business. Since, hey, dude, as a business owner, you're creating work for other people. So yeah, so if we charge you too much, most likely you as a business owner are going to say, dude, I'm not going to work it. I'm not going to create my business anymore. Therefore, all of a sudden, being on the end of a business owner is a lot more profitable. Now, I don't know about your country, but in the Netherlands, if you're an investor, this is the interesting part. They charge you practically 0%. Now, you might be thinking, wait, what? 0%? Well, of course, in the Netherlands, we've got something called box 3. If you have income that comes in from box 3, the government sees this as capital that you own, and that, it's like saving your money, And we can't really charge you on the money that you saved. And that's why, you're investing your money. You're putting your money to work. All of a sudden, in this case, your dollars and your euros, of course, they work for more dollars and for more euros. That's the whole idea of being an investor. And now you might be thinking, okay, I want to make money. I want to create my own wealth. And I got to learn the taxes? Yes. Because you know what happens? Taxes are so important. Because, yeah, I get it. If I make $500,000 a year, you know what? I'll just make $1 million out of it. It calculates a lot easier, of course. If you make $1 million in a year, and I take 20% as a government from that, that's of course $200K. 200,000 in a year from one business. Whereas the moment you're an employee, you're working your ass off for 3,000 per month, which would, somewhere be 36,000 in a year. This is what you're making in a year. And the government says, you know what, I'll take just half of it, which is 18K. With that business owner, the government already has 200K. One business, boom. And I only took 20%. Whereas I took 18%, 18K just like that. And you're one employee and the government says, dude, you got to work harder because this guy's already it's almost like 10 times as fast by charging that business. And this is the huge difference between, if you don't know how taxes work in your country, yeah, I get it. I understand that you're being charged so much that you can never build your wealth at all. And this is why it's so important, why you should learn how the taxes work in your country. What are the rules? You got to see it like this. This is not a cheat or anything. This is all completely legal. Even this part, the box 3 thing, I'll tell you that. I could fill several Facebook Live videos on just this, on the investor, how you can be the investor and how you can make a lot of money without the government saying, sir, Lucas, you got to pay up. The government says, well done, Lucas, you've been investing here and you got a huge portfolio here, but if you take a look, you're doing well, you're doing good. If, being an investor, for example, you got to see it like this. If you're a real estate investor, what happens is you're creating homes for other people. Now you might be thinking, yeah, but those people who own real estate, those are bitches. They take all the houses that other people cannot buy. Yes, that's what I'm saying. Other people cannot buy real estate. That's why investors buy those real estate buildings so that other people can live in it who can pay for that. Now you might be thinking, yeah, but you're just talking yourself in a good thing. Yeah, but we're doing this because we want to create our own wealth. Simple as that. Okay, so that's the taxes thing, okay? I'm going to wipe it out for today because today is not about only taxes, of course. It's about building your wealth, creating your own wealth without any money. And by looking at the taxes, by understanding how taxes work in your country, for yourself, you can already save up a lot of money that the government doesn't take out of your pocket. The government doesn't want to take money out of your pocket to make you even poorer. Yes, they do. They take money out of your pocket. I get that. But their job is to spread out all the money so that everybody benefits from that. If you don't know how to make a good use of the taxes, then yes, I get that. Okay, do we still have any battery? Yes, we still have any battery. Okay, point number 3 is, of course, investing your money. Like I just mentioned a moment ago, what I love, of course, is I love real estate. I love real estate so much because there are so many advantages of having real estate. But the problem is with real estate is not free. You have to have a certain investment. You got to put in a little bit of money first before you can actually buy real estate. Real estate is not completely money. Those who do say, Lucas, you can buy real estate with zero of your own money. Yes, that's true. But that just means you are getting loans from other people to be able to buy real estate. Now, that is kind of risky because you're actually betting on something using 100% of somebody else's money. If you're investing a part of your own money, you could still say, you know what? I've lowered my risk the moment I invest in real estate. Real estate, it's very simple. Like I mentioned the other day, if you have a home or two, for example, and the rent of the home is like $1,000, the mortgage of the home is about $500. Very simple. That just means you've got $500 left in your own pocket. The moment you have two of those things, you have $1,000 in your own pocket net every month. This is very simple. The idea is very simple. So the only thing is you invest in something that grows over time. Now, the idea of houses as well, the moment you have property grows over time in value as well. And the cool part of real estate is the bank would even loan you money to buy real estate. This is the only asset class that is out there that the bank says, you know what, take our money to buy something that will gain you money, but us as well. Like what I mean with the $500 here is, of course, you've got a mortgage, and a mortgage is somewhere between 3 and 5%. The bank says, you know what, we'll loan you money for free, and you give us back 3 to 5% of interest every year for the coming, 30 years. And that is the interesting part. The bank says, we don't have to do anything. We just loan you money, and all of a sudden we get 3 to 5% of interest every year. You, on the other hand, of course, because this is the mortgage, you have your end as well. This could be somewhere between 5 and 10%. All of a sudden, you're making money with your money. Now, not everybody believes in this, that having $1 becomes $2. Because in the end, what you don't have to do anymore, you don't have to exchange your time for money, because that's what the house is already doing for you. Now, that's one thing, and I could talk about this for many hours as well. The other end is, of course, investing on the stock market. That's what I love as well. The stock market is, to me, it's like a game sometimes, It's not completely like the casino, but it's like a game, If you know which stocks will make you money, you're going to bet on it. You're going to buy the shares of that company. You're going to wait it out. The moment the shares of those stocks rise in value, you sell them off. And that's how you make money. The idea is very simple. If you know, there's different strategies on this as well. If you know which stocks to buy, when to buy it, and when to sell it off, if you could predict the future, that's everything. Can we predict the future? No. No, we cannot predict the future, but it is an easy way to start making money. There are ways to, minimize the risk instead of just trying to predict. We're not going to predict because we can't predict the future. I cannot, and most likely you cannot as well. If you can, just let me know, because let me then know what I should do, okay, for the coming 10 years. But I suppose you can't predict the future as well, just like I can't. And then what happens is, on the stock market, what you would want is, of course, is you want to have a certain strategy that helps you saying, like, you know what, if I do this, and if I select certain stocks, I exactly know which stocks I should select, so that will minimize my risk and yet make a high return. That's what we want. And that's something what I'm teaching as well. I'm teaching that as a course myself. It's called Grow Your Money. The name already says it, It's a method that I teach you how you can select certain stocks, which stocks you would select to make money, when to buy, of course, when to sell off your stocks, how to make money on the long run, and of course even with compounding. Compounding just means how to stack up your money and make even more money off the money that you stacked up on. If you think about that, dude, I can talk about lots of lives about that as well. Okay, so the thing is here, investing your money, you got to see it like this. Why do you invest your money? Because the moment I stop working, the income stops as well. So therefore, you got to start investing in money so that maybe in 10 years' time, you've invested so much that the investment comes back by itself, and all of a sudden, you don't have to work anymore because it's working by itself. The money is making more money. Like I said over here, if you have, so let's pretend if you have 4 of these homes that make $500 each in income, all of a sudden you've got $3,000 in your pocket every month. And like I said, in the taxes, if you already know how the taxes work, and you know in your country, in my country is of course box 3, like I said, they charge you 0%, and sometimes they charge you 1%. You know, depending on how big your portfolio is. But if you have 4 homes, no, let's pretend you have 5 homes, because you got to live in one yourself. This is you. You got to live in the biggest home. You got to live in the biggest home, and all the other 4 homes take care of your expenses. Now, this home of yours is $1,000. Let's pretend that your home yourself is $1,000, and that's why we need another home, just to make the number complete. Now, your home costs $1,000. You know, every month you got to pay a mortgage. It's $1,000. But because you have 2 other homes, you know, this one over here and this one over here, they already pay off that initial $1,000 per month. Next to that, you've got 3 more homes that give you and generate you $1,500 per month. Now, with that, you should be already able to retire from this day on right away, because the home that you live in is being paid off by somebody else, by these 2 homeowners, and these 3 homeowners pay for all the, you know, daily expenses that you have on a monthly basis. And with 5 homes for real estate properties, you should be able to live off your own investments already. And this is how you can create wealth. I'm not telling you to become a millionaire overnight. I'm telling you how you can grow your wealth in a rather easy way without any money to start out with. You don't have to be Donald Trump and say, like, my father loaned me $1 million. It doesn't have to be like that. You see, Donald Trump is a billionaire. We don't need to be a billionaire to have a wealthy life. What we want is, we want to work on our terms, we want to make money on our terms, and we want to enjoy life as it is. And that's real wealth. And this is the video for today. Hey, if you like this video, of course, please give me a thumbs up. If you haven't subscribed to the channel yet, be sure to hit that subscribe button, of course. If you like content like these and you like more stuff, be sure to check out my website, lukasshoe.com, and you can find all kinds of videos and articles and blogs about making money. Thank you very much, and happy investing, of course, and I'll see you on the next video. Bye-bye.